Probably one of the quietest trading days, actually, that we've got for a while. Okay, cool. Let's take a quick look at this disclaimer. This presentation provided solely as a courtesy to aid the education of our customers and prospective customers. It will discuss risk management concepts, strategies, and does not include recommendation or endorsement of any particular security, chart pattern, or investment strategy by Forex.com. This presentation has been prepared without regard to the specific investment objectives, financial situation, and needs of any particular recipient, and we don't guarantee or verify the accuracy of the information or commentary provided. Futures, options on futures, foreign exchange and other leveraged products, they involve substantial risk of loss and they're not suitable for all investors. Spot gold and silver contracts, they're not subject to regulation under the US Commodities Exchange Act. Contracts for difference, otherwise known as CFDs, they're not available to the they're not available for US residents because of regulatory reasons, not because we don't want them. Okay, everyone. Thanks very much for joining. I know this is an unusual time. Glad to see that one of you saw me in Bloomberg. Yes, I was on there very, very early, so I feel like I've already done a day's work already. But overall, yes. What's going on today? Well, let's quickly get right into that. Don't worry too much about looking what's on there right now. Let me get rid of that, put this up. First thing I want to show you guys is Euro, because as I've been messing around with my very slow machine, we've had some quite important data out of Europe. We've had some unemployment data. We've also had some the CPI estimate, and interesting enough, the market reaction to it, as you can see, this is an hourly chart, very muted. I think today the real name of the game really has been consolidation. Certainly in quite a lot of them. Someone wants to talk about gold. Okay, I will. Just bear with me. Can I just finish this 1 second? Oh, sorry, FX Roy. No, we're going to do Euro first, and then I will look at all the other things you want to talk about. But you know, it's consolidation. We've seen consolidation in across the board. In the dollar is hesitating above that 82 level in the dollar index. Yen crosses are lower, and as you can see, Euro's absolutely no different. Now, what we've just had, some better than expected confidence data coming out of the Eurozone for August, but we did, and the unemployment rate stayed steady as expected at 12.1%. So that's still very, very high. But it's really the CPI estimate for August that is interesting to me. It fell further, from 1.6% to 1.3% in August. Now, a lot of people think that is, a lot of people actually think that is, or you know, that, or the ECB itself expects that to pick up, inflation to pick up. So, because we're now so far away from the target, or further away from the target, I should say, than where we were before, or where we were last month, that just makes ECB action slightly more likely, but that's not being reflected here. As you can see, it's quite rare for an hourly chart to just be so smooth, as you can see in Eurodollar, certainly over recent weeks anyway. But that's where we are now. Just putting us onto a slightly longer time frame. As you can see, 131.80 is the key level to watch on the downside there with Euro. Okay, so you've asked for cable. Cable is testing a massive level, that 155 level, a close below there, that's the 200-day moving average. It is the red line on this chart. A close below there is a bearish development. I want to draw your attention to a couple of things. Number one, the fact that we've got this kind of bearish crossover on the MACD, and I know MACDs don't necessarily, point to exact price action, very difficult to trade off, but they do show kind of momentum, and it does suggest that we may have peaked for now. Now, don't hold your breath too much. I'm not 100% sure we're going to tumble in cable, but the second thing I draw your attention to is the fact that we just haven't been able to get above that 157 level. 157.20 was the high from there, from mid-August, and also the high from June. The fact we haven't been able to get above there suggests to me that we are looking very, very weak, or that not that we're looking weak, but more that the push to the upside isn't in place right now. It's just withering away, and that's really kind of the feeling that we're getting. I think the other thing that we're looking at, here is we've got some, we have got some hefty support levels down here. Obviously, a break below 155, a weekly raise below 155, it's a bearish development. that then opens the way to this 50-day and 100-day moving average here, which come in kind of between 53.60 and 53.90. I think they could potentially hold. If this is going to be, I don't think today we're going to make any directional moves. I actually think next week the risk is maybe to the upside for sterling. However, I personally think it's more likely to come under pressure from any strength rather than people to start selling it coming off the back of this 200-day moving average. I think, cable could potentially maybe retry that 156.50 level, maybe even towards the 157.20. That is going to attract a massive wave of selling in our view, just because we just have it's a historical high now. And it doesn't seem like the appetite is there. It hasn't been there 2 weeks ago. It wasn't there 2 months ago. I don't see why it would be there now, especially what with Mark Carney being he's been very firm with his forward guidance. He's willing to throw more QE at the economy if interest rates stay high. And remember, that's quite currency negative. So I hope that helps there, FX Roy. The other thing, someone's looking for sterling yen. So these are the yen crosses that I spoke about. As you can see, still in consolidation mode here. This is an hourly chart, so let's just look at that. Still very much in consolidation mode, not much going on at all. Bias to the downside really, but in a very moderate way. This is the 50-hour moving average, which comes in at just below 152 there. That's been capping the downside for now. In fact, you could probably draw a nice little, very nice little short-term trade there, whereby that 150, any dip kind of at 152 where we're testing now, has been picked up on the upside. So where do I think it's going in the very short term? I think there could be a mildly, I think we could see, I think there's a mildly, bearish bias in the short term. If we get below this 152 level, then potentially we could get back towards the kind of 150, 150 levels from here. From earlier this week, I should say. In the slightly longer term, I still see the upside. I still see some upside there. Let's get rid of this line. It's just confusing. Let's push this over a little bit so we can see where I'm talking about. I mean, for me, this is still an uptrend, albeit quite mild. But we're still in an uptrend above 150 in sterling yen. So I think kind of any drop to kind of, if we get below that 152 level, get below the 151.5 level I mentioned, I think there could be some more buying interest. Obviously, the 50-day moving average comes in at 151.40, so that could also attract some buying interest. But overall, I think we're in consolidation, and this is the daily chart looking over a number of months. But if you just take this section here, which is a section from June, we just haven't been able to get above that 155 level, and that to me is a medium-term cap to the upside, a bit like that level that I just mentioned in cable, a bit like that 157 level. So yeah, we just kind of, this is complete range trading activity. Quite interesting though that we're making a series of higher lows. That suggests that, potentially in the more medium term, the bias is to the upside. So really saying whether or not I see it heading upwards or downwards, it depends on your time frame, Richard. In the shorter term, I think there could be a little bit of weakness maybe. In the longer term though, I do think weakness will be capped and we could move higher. Now, the one thing I would say is that we did get Japanese inflation out today, and interestingly enough, even though inflation picked up, it still points towards further stimulus coming out of the Bank of Japan. Now, if we focus on stimulus in September, what with the Fed tapering story gathering some tracks, the prospect maybe we'll hear more from the Bank of Japan next week, that they will potentially think about adding to their stimulus program later this year. That could be yen negative. So I think, we've only got 18 months left now for the Bank of Japan to meet its inflation target. We know that a lot of inflation is it's almost accidental. It's the wrong type of inflation. It's being imported because of a weaker yen. So they've still got work to do, their work cut out, and that should be yen negative. So for me, sterling yen still looks quite positive, and this is just very much a consolidation pattern. Now, Richard, it can be quite stressful sometimes, or just a bit frustrating, I should say, not stressful, in terms of trading when they're in these patterns. But as you can see, if you want to widen your time frame a little bit, and maybe just kind of leave orders out, this kind of 151.30 level could act as good support, certainly in the short term. could act maybe as some kind of buying interest there, whereas it does look kind of 153.5, say, and then towards this kind of 155 level, does seem to be thwarting the upside. So they're the levels that we're trading in right now. That's one strategy of doing it, is trading the range. The other one is obviously the breakout. A breakout above 154.90 to the upside suggests we could go higher, maybe towards 160. Obviously, a fall below that 150, 130 level could get us to 150, and then a more substantial fall below 150 could open their way to here, to this kind of 14, just under 147, 146.80 level, or the 200-day moving average. We're not getting much help from the oscillators at the moment. They're all kind of flatlining a little bit, as one would expect maybe on the Friday before Labor Day. Someone's asked me about gold, and they waited very patiently. Let's push this up. Gold's been an interesting one. I would just want to show you a quick chart of gold. Bear with me one moment. I'm going to show you a different chart first. This is gold today. Gold since the start of this session. And as you can see, 8 o'clock, massive drop, $10 drop. Big drop compared to, complete change in the range. What was driving that? Could have been a fix. And by that, it could have just been a deluge of selling orders at 8 o'clock. What's significant about 8 o'clock is when the London markets open. So that could have been the reason for that. Obviously, overnight, we did get the news that the UK is not going to go ahead with any type of action in Syria. Earlier this week, let me just stretch this out for a few days. Since the beginning of this week, gold has been in, as you can see, throughout kind of heightened tensions in Syria. Gold had been on the up, got as high as kind of the high being 14.33. That was on the 28th of this month, so on Wednesday. And since then, we've been declining with that sharp sell-off earlier. This to me could be could potentially be a reaction to the fact that a Syrian strike is less likely. Obviously, the thing is it's very easy to just pin something on one thing. It's very easy to turn around and say, oh, this is all about Syria, or this is all about, Fed tapering or whatever else. And the reason why is because there's just so many things that are driving the market. We've got all the economic data that's coming out next week. We've got all the ECB, we've got all the central bank meetings, and we've got the non-farm payrolls, the possibility of tapering from the Fed, and of course geopolitical tensions in the Middle East region. So lots of things going on. Maybe an easing of those tensions, maybe potentially lower expectations now. That they will, that there'll be some sort of Western military action, could potentially be just easing the pressure of gold. Gold, especially during war, something that you want to hold because it's a store of value. So in that sense, that could be one of the reasons why gold has risen. The other thing, obviously, just looking at where it could potentially go next. Oh, bear with me. As you can see here, about 14. Just below that 1440 level, that's been the high so far. Obviously, didn't really get much above these highs from May, and that's quite interesting, especially if we see a sharper pullback. I do think investors might be slightly cautious. I think there's a chance that we'll break above 1430 if the US, for example, was to go it alone and go into Syria on its own. Spook investors, they might just buy gold rather than kind of sell everything else. They might just buy gold on top of buying stocks and other risky assets, just as that kind of store of value, really. And then, of course, 1358, so just below that 1360 level, massive level of support there in the short term. 100-day moving average, that's kind of the level that we're talking about. That also coincides with the lows from earlier this month. Or when we paused for breath, I should say, earlier this month, after kind of bouncing off that sub 1300 low from the beginning of August. The other thing I want to show you is actually, bear with me one moment, is gold priced in yen, because obviously what we did see today is that gold. Or is that inflation? So remember, gold is considered an inflation hedge. It's inflation rose in Japan, and just to show you really how this can sometimes impact the gold price. Obviously, Syria, an easing of Syrian tensions is also helping gold today, but this is gold price in Japanese yen, and that's come off again today. Not obviously by too much, but it certainly has come down. Okay, what else? Someone else was asking me about something. Someone asked why we didn't see a drop in US data. I'm assuming you might be talking about yesterday. We did get much better than expected data out of the US. We got an uptick or a revision higher in Q2 GDP. We also saw some very good initial jobless claims, so all the good stuff there. But it's really going to be next week. So we've got the ISM surveys, and then of course we get that non-farm payrolls. That's a massive number. That comes out next Friday. So that's what everyone's going to be looking to, because obviously a big number could really secure Fed tapering in the September meeting. However, now throw that into the mix. If the US was to go into Syria and it was to cause a bit of disruption in markets, that could actually delay tapering. But just keep that at the back of your mind. It's not, it hasn't happened yet, so there's certainly no point planning for it right now. Just keep it at the back of your mind, though. Okay, what next? What would you like? Oh, I tell you, sorry, there was one thing I did want to look at now, which is the dollar index. Dollar index has been kind of an interesting story of stop-starts over the last few weeks. It's fallen off quite sharply after failing to really stay above these highs from May. We had a great day yesterday, real recovery day as Syrian fears eased, stocks moved higher. The dollar proved itself as a bit of a growth currency and moved higher. Broke above its 200-day moving average, and it's still above its 200-day moving average. That comes in at 81.64. But we've just really been tripping over that 82 level and failing to get above it. It's really thwarted the bulls here, and there really isn't as much as there was a lot of bullish interest in gold in the dollar yesterday on a broad-based basis, because the dollar index, remember, is the dollar against G10 trading partners, or its largest G10 trading partners. But today there's just not been the interest, and you can kind of see that it's not really going anywhere fast. There is a kind of cluster of resistance here between 82.20 to 82.40. That's the 50 and 100-day moving averages, respectively. And that could also just be adding to that sense of caution with the dollar. So still, this is another week, guys. And those of you who joined me last week will know, I mentioned about the fact that the dollar's done very well against emerging markets. Remember, we saw not today or yesterday, but we saw earlier in the week some great gains in the dollar against some of the emerging market currencies. That has, obviously still is failing to filter through to the G10 in the same type of extent or in the same way. And that's what we really need to see a broad-based rally in the dollar. So a sustainable rally in the dollar. We need to see it just move more broadly. Okay, guys, has anyone got any questions? I'm happy to take a few. Do let me know. Fundamentals for oil. Yes, sorry, Pan. Yeah, let's look at oil, of course. Oil, a bit like gold, really. Let's just look at, do you know what? Let's look at Brent, because we're in UK hours. So, a bit like oil. Where do you, before I actually put this chart up, where do you think oil is? Just quick, just if you guys put that in the chat, in the little box that you write in, just put if higher or lower, where you think Brent crude oil is today. So Pam says higher, Zahid lower, Piotr higher. Okay, let's go and let me check this out. Indeed, higher. This is kind of an interesting one. Let's just look at it over the last 5 days, though. And there you kind of get the weaker, or the real story. Is it going lower, Rafiq? I would probably agree with you. Oil has picked up today, but it's nowhere near back to the highs that it was at the peak of the Syria tension. One of the reasons potentially for this slight rise in gold has obviously been maybe some weakness in the dollar. Oil. I keep saying gold. Has been a slight rise, the slight weakness in the dollar that we've seen. As I said, it's failing really to get above that 82 level. Again, it's not really it's not a massive move, not compared to the moves that we've seen this year. It's really about kind of $1 move. Now, compared to kind of other markets, though, this is a fantastic market to trade in this environment. Oil, largely because not only does it move quite closely with the dollar, but it's moving on the back of news flow. When other things are quite weak and don't seem to be going anywhere, oil really does. And I think, just getting from you guys, there's no real clear understanding out there. Now, Ray, you mentioned, Ray, you're talking about silver. I'll talk about that in a minute. Someone just said my next support for gold. I did tell you 1391 is the first one, and then 1360, which is the 100-day moving average. So the other Ray, said, if Syria is taxed by America, how will this affect currencies? Actually, funnily enough, if the US attacks Syria on its own, or does a retaliatory attack on Syria on its own, it could be dollar negative. It would be oil would probably go higher, I would imagine, and so would gold. So as you can see here, it just looks like we've made a bit of a reversal. However, as you can see, the markets are still very cautious. They're still picking up oil on the dips back to that 1400 level. This is Brent crude oil, by the way, for those who've just joined. And the main reason why, of course, is because, there's still so much uncertainty. There's still maybe a strike. Maybe the UK will change its mind in some way. We haven't got the UN report yet. It's unlikely that the UK will change its mind, or that Cameron will defy his government, but you never know. Ty, you've just said an up or down day for the dollar. Hopefully I just answered your question, and it's a bit of a down day. The other thing, Ray, you've talked about silver is affected by the same way as gold. This week it has been, because it's been affected by risk sentiment, overall risk sentiment. So it's kind of had a very similar move to gold. Let's just pull it up here one moment. It's just silver. It's just a very quick daily chart, and as you can see, rallied and then it backed off. That 25 level though is huge level of resistance, and the fact we didn't get above there to me suggests that we'll probably need some sort of outright shock coming out of Syria. Maybe the US going in on its own using ground troops, maybe even Russia joining Syria. I don't know, something massive, something that we don't expect, to kind of really shoot these assets higher, dropping a few bombs in retaliatory fashion, maybe using drones rather than actual real people. Probably not going to have massive effect on the markets. Remember, the US tend to use a lot of drones anyway, so that's kind of my key idea there. So, Pan, you also want to know about WTI, so I've told you about Brent. They've both been moving in a similar-ish direction, obviously. They tend to during this environment. After getting to 110, though, again, massive level of resistance, and we really backed away sharply from there. Very good support, 104.20. 104.40, which is that 50-day moving average. And I can just imagine us trading in this range. Even with the fears in Syria, the fact that we couldn't break above 110 suggests that, we are, there's an awful lot of selling interest. So my piece of advice for those of you looking at WTI is that potentially, for me, we're still range bound, certainly have been the last 6 weeks. That's what this says to me. But also, if we do break above 110, be careful about going in on a long on any breakout to the upside, because there does seem to be a big wave of selling pressure there. You can see that by that very long, thin shadow on the candle. That's almost like a very long wick. And when you get that, it does suggest that it's a bit of the market's trying to make a top here, and it doesn't really feel comfortable above 110. And I would say that's where we are now. The market doesn't feel comfortable at 110. That's kind of the real key there. Stock markets, are they going lower, or is pullback done for now? It appears that the pullback may be done for now. Obviously the S&P 500 isn't open right now. But yesterday we had quite a nice day, did recover a bit, managing to just hold at that 100-day moving average, which comes in just below 1640. Is the sell-off done for now? I think it really does depend. Markets are very jittery. And in September, there is a lot of fundamental event risk, including NFPs next week and obviously Fed tapering. And that's what it all comes down to. One could quite easily argue that maybe stocks haven't priced in tapering yet, and so we could kind of fall lower. But I do think, right now the fall has been cushioned. We could get back towards maybe these highs here, about just below 1700 level, before we really go lower. I think people would rather sell on any strength, try and get as much, the benefit as they can, rather than kind of just, sell into it at this level. They might wait for it to get back to 1700 first. Okay, everybody, it's 10:30. Thank you so much for joining. I really hope that helped. I hope you were able to learn something from it, and it was clear and concise enough for you all. Do enjoy your weekend, and I will be back with you in just a few days, actually, back on Tuesday at 10 o'clock. So thanks, everybody, for joining. Bye-bye.